All right, hi everyone. Welcome to today's Magnificent 7 Q1's earnings review brought to you by Vantage Markets. And we're streaming directly into the Vantage app as well as over Zoom. So let's get things going. Right, before we start, as usual, please take note of the disclaimer, right? The information, context, and opinions which are expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage and are solely used for educational purposes as they do not constitute investment advice and a consultation on how a client should trade. Also, take note of the risk warning that comes with trading margin forex and CFDs as they carry significant risks and is not suitable for all investors. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between Vantage Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. So Q1 earnings seasons in the US have been concluded, right? So we're going to take a quick review of the Mag 7, right? These are basically the big tech stocks. And we'll see how they have performed at the most recent earnings result and what can we expect in the future. And also we'll look at the Nvidia stock split, which has just taken place, or which came into action last night, right? As US markets reopened on Monday, 10th of June. That's when the stock split came into effect. So we'll take a look at what is a stock split and how would that impact Nvidia's share price. And finally, we'll wrap up the session by performing a technical analysis on the Mag 7 and what are the key levels to watch out for. Right. Before we dive into the earnings of each of these companies, right? Let's take a look at the total market capitalization of the Magnificent Seven, right? We can see that these stocks make up the SPY ETF, right? The SPY ETF is the ETF that tracks the S&P 500 index, and it also makes up a big chunk of the Triple Q ETF, which tracks the Nasdaq 100 index, right? So as we know, these 7 companies, right, make up a pretty large percentage of the SPY and Triple Q ETF. So when these stocks move in a big way, whether they move up or down, they are going to have a huge impact on the direction of those ETFs as well, right? So you're going to see, if you see majority of these 7 companies move up strongly, they're going to pull up the overall index, even though the other companies may not be performing so well, right, in terms of share price performance. Conversely, when you see the share prices of these 7 companies pull back in a strong way, right, it's going to drag down the entire index, even though you may have other companies within those indices performing pretty well, right? So that's important to take note of that as well. It's important to know who the Mag 7 are and how much weight they carry in their respective indices and how their overall performance actually drives the direction for those indices themselves. Right. Now, currently, as of 10th of June, which was yesterday, right, Microsoft has the largest market capitalization at 3.2 trillion US dollars, followed by Nvidia at 2.9. Nvidia was previously lower in the list, but of course, with the recent run up over the last couple of years, its market capitalization has risen tremendously. Right, then we have Apple in third place at 2.9 trillion as well. Apple is probably about, I think, 2.91 or something, 2.92. Nvidia is about 2.95 trillion currently. Then we have Alphabet at 2.2 trillion, Amazon at 1.9 trillion, Meta Platforms at 1.3, and finally Tesla at just 500 billion. Right, Tesla, as you can see, has been the weakest performer out of the Mag 7 for quite a while now. And maybe, it could be replaced by another big tech company as well in the coming future, right? So let's see how it plays out. Right, okay, so we'll start with the revenue and earnings for Microsoft. Right, so we can see here the latest earnings were released on April 25th. So this was the results for the first quarter of 2024. Now, we can see that looking at just this particular earnings result, we can see there's an EPS surprise and revenue surprise as well. So EPS and revenue surprise means the respective metrics have come in higher than their forecast. So EPS is earnings per share, which measures the profitability of the company, and revenue is the metric that measures total sales. So just looking at the headline level, we can see that EPS and revenue have come in higher or have exceeded their respective forecasts by a pretty decent margin. However, when we zoom out a little bit and look at it on a quarterly basis, we can actually see revenue has trended lower, right? Revenue has actually dropped slightly. In the previous quarter, which is the last quarter of 2023, we saw Microsoft's revenue come in at 62 billion, and in the latest result, it has dropped a little bit lower to 61.86 billion. Similarly, EPS has actually pretty much remained the same. EPS actually just moved a little bit higher. It was 2.93 in the previous quarter, and in the current quarter, it came in at 2.94. So profitability has remained relatively stable, but revenue looks to have edged down a little bit lower. Now, if we look at the previous 3 quarters before, we saw revenue and EPS generally grow quarter after quarter, right? We saw them both these metrics trending higher. However, the first quarter of 2024 points to a slight slowdown in revenue growth right now. Whether this plays out in the second quarter is going to be important as well, because then there may be some real concerns for the stock market, right? For the US stock market, if we see the earnings of these big Mag 7 companies continue to head lower, right? They moderate lower, right? If revenue moderates lower and EPS drops as well, there could be some major concerns for the US stock market moving forward, right? Remember, EPS measures profitability, and if you see that metric drop lower, net income is they're making less money, of course. Now, on a quarterly basis, the results don't look that great, right? Of course, I mean, we did see EPS and revenue beat their respective forecasts, but looking at the quarterly growth rate, in revenue just edging a little bit lower, maybe some slight concern should we see that play out in the second quarter as well. Now, on an annualized basis, when we look at the results on an annualized basis, right? So this means comparing to the corresponding period of the last fiscal year, we can see revenue actually increased by 17% year over year. So we are looking now at year over year results. Operating income increased as well, 23% year over year. Net income as well by 20%, and EPS per share also increased by 20%. So looking at it on an annualized basis, these are all great results, right? Revenue, operating income, net income, diluted earnings, all increasing quite steadily. And also we can see, of course, with AI being the main theme and driver for many companies this year and for the stock market as well, where we can see Microsoft's Copilot and Copilot Stack are part of the new drive that's going to, or that's part of the new theme that's going to drive future business for them as well. Right, so you can see cloud revenue itself, Microsoft cloud revenue itself was up 35 billion, 23% or 23% year over year. Right, you can also see productivity and business processes also increase. You also have Office commercial products and cloud services, consumer products, LinkedIn revenue, and various other services as well, increasing very strongly on an annualized basis. Right, so generally we can see that it has been a good earnings result, right? Looking at the results on an annualized basis, and also looking out for the future outlook. But what would be just some concern if we do see revenue and EPS moderate lower in the second quarter of this year, then that may raise some red flags for Microsoft, not only Microsoft, but for the Mag 7 and the overall indices as well. Right, so of course, good results, good headline results for the first quarter of 2024 for Microsoft, but maybe something to take note of should we see a potential moderation of revenue and EPS. Right, NVIDIA, which has been the darling of the stock market for pretty much the last 2 years, has seen its revenue and earnings per share accelerate tremendously, right? You can see that revenue coming in. Okay, the blue bar is revenue, the gray bars are EPS. We can see revenue was coming in at about 7 billion, and now it has risen to about as high as 26 billion. So you've seen like almost a 3.5 fold increase in revenue, while EPS has soared as well, coming in at about $1 per share, rising by almost 6-fold, coming up to $6.12 per share. So we can see revenue growing, both revenue and EPS growing very steadily on a quarterly basis, and the outlook and future forward guidance for NVIDIA is looking good as well, right? So we have seen revenue increase from 22 billion to 26 billion, and EPS going from about $5.60 coming up to $6.12. So very strong earnings result. Future forward guidance looks good. But remember, any potential drop-off in revenue and EPS could likely impact the share price quite negatively, right? So remember, right now there's a lot of optimism, a lot of hype around NVIDIA. So should we see any potential miss in revenue or EPS in the next quarter or in the coming quarters, right? That's going to have a pretty detrimental impact on the share price of NVIDIA. But for now, things are looking great, and we are likely to see this uh, company probably or the rather share price remain elevated. Right. Looking at the earnings press release, right? There's all good all good news as well with record revenue and record increases, right? Record revenue of quarterly revenue of 36 billion, up 18% from the previous quarter and up 262% from a year ago. So both quarterly and annualized readings on revenue have increased significantly. Data center revenue has also jumped up from 23% from the previous quarter and 427% from the year before. Right. And okay, we'll cover this tech 10-for-1 stock split as well. Okay, it was effective last Friday, and it started to come into effect rather as markets opened on yesterday, 10th of June. We've also raised the dividends as well. Quarterly cash dividend has been raised by 150% to 1 cent per share. Right. So generally, you can see this has been a very strong quarter once again for NVIDIA. Right. Data center growth was fueled by, of course, demand for generative AI training and inference. Right. Also beyond cloud services as well. Generative AI has also expanded to consumer internet companies and enterprises as well, right? So all in, it's a very positive outlook or positive quarter for NVIDIA, and the outlook is looking good as well. Okay, now looking at Apple, right, we can see a significant decline in revenue and EPS for Apple for the recent quarter. Right, although we did see EPS coming in higher than its forecast and revenue as well, but we are seeing a pretty significant or notable decline in revenue as well. Revenue came in at about 119.6 billion in the last quarter. It has now dropped to 91 billion. Right, so it's quite a significant drop in revenue, and at the same time, EPS has dropped as well, coming in at $2.18 in the previous quarter. It has dropped to $1.53. So very notable drop in both revenue and profitability after what we saw was a nice rebound in corporate earnings throughout 2023. Right, 2023 we saw pretty much a nice rebound in corporate earnings for Apple. However, we now see in this current quarter a sharp pullback as well. Right, now on the headline, look at the press release, right? It's all good news, right? Services revenue reaches new all-time record. EPS sets March quarter record as well, right? But generally, you can see that should we see revenue and EPS continue to moderate lower in the second quarter of 2024, there's some serious concerns for Apple moving forward, right? Okay, so during the quarter as well, I think we just had the latest uh, developers conference by Apple as well, where they released new updates to the iOS system as well as new devices as well, which is of course the Apple Vision Pro, right? So this was the Worldwide Developers Conference, which was conducted just recently, I believe last night or a couple of days ago, right? So perhaps this new range, the launch of this new range of software and hardware could help propel sales for the next quarter as well. Right, moving on to Alphabet or Google, right? These are Alphabet Class A shares. So it looks like a similar story as well for Alphabet after what was a strong 2023 with corporate earnings rising pretty steadily. We have now seen a decline in revenue. Although they are still profitable, EPS has actually climbed higher. Overall revenue has pulled back a little bit. So revenue came in at $86.3 billion in the last quarter of 2023. It edged slightly lower down to 80.5 billion. So almost about a 8% drop in revenue. But however, EPS has actually moved higher. EPS grew from $1.64 to about $1.89 as well. So they're still being profitable despite the the slight drop off in revenue. Now, looking at the first quarter results, right? So they've seen strong performance from their search businesses, YouTube and cloud as well, right? And of course, they have their Gemini Era, which is their AI co-pilot, right? Although they did have a lot of teething problems with this with their AI co-pilot, which is basically Gemini, but it does seem like they are starting to rectify a lot of those initial issues, and perhaps we could see a much better autopilot or co-pilot from Google. Right, and also to take note, they've also re-engineered their cost base here. So this is just a fancy term for saying they've implemented a lot of cost-cutting measures, which is why we are seeing EPS climb higher despite the drop in revenue. So EPS climbing higher, remember, refers to profitability. So despite revenue dropping off, because of the cost-cutting measures, right, they have managed to increase their EPS for this quarter as well. Right, so in all, it looks like they're working. They seem to be sorting out their issues, whether financially or cost pressures, and also the product level as well. They seem to be rectifying all their issues, and they may have a pretty good second quarter earnings as well. Right, then moving on to Amazon, somewhat similar story as well. A strong 2023 with corporate revenue and EPS rising. However, in the latest quarter, we are seeing a slight drop off as well. Revenue came in at about 170 billion last quarter. Now it's edged down to about dropped down to 143 billion. And earnings per share, which was at about $1, which came in at $1 at the previous quarter, now dropped down just marginally down to 98 cents. Right. So although revenue has dropped off, profitability has remained elevated. So this once again could be due to serious cost-cutting measures that have taken place over the last quarter or so. Right, similar story to Alphabet. Right, so you can see net sales increased 13% in the first quarter, year over year. So they're comparing it to the year before. So these are year over year sales metrics, 13%. And they also had unfavorable impact from currency exchange rates, right? And we can see North America increased 12% year over year. International segment increased 10% as well year over year. And AWS also increased very strongly as well. Operating income has also operating income and net income has also shown great improvement over the last in this quarter based on an annualized basis year over year, right? So they've also have improved operating cash flow, free cash flow, right? So in all, it was a good start to the year for Amazon, right? You can see both consumer experience improvements and financial results as well. So companies renewing their infrastructure modernization efforts and the appeal of AWS's AI capabilities is re-accelerating growth for this segment. Right, so far the first quarter has been really good, and also advertising efforts continue to benefit as the Amazon stores and Prime Video business continue to grow. Right, looking at Meta, we are seeing also once again, right, a similar story, a strong what was a strong growth or steady growth in 2023 with regards to revenue and EPS. We are seeing a slight drop off in the current quarter, right, or the latest results. Right, we see revenue came in at 40.1 billion in the previous quarter. Now it's dropped down to about 36 billion. So almost 11 or 12% drop in revenue, and earnings per share has dipped as well from $5.33 down to $4.71 per share as well. right? So you can see a similar story for most of the Magnificent Seven companies. What was a strong 2023 with regards to corporate earnings is now starting to see a slight moderation in revenue and EPS. Right. So on Meta, so when you look at the annualized readings, year-over-year readings, right, that of course is going to show great results, right? Revenue increased 27%, cost and expenses also increased by 6%, income from operations increased by 91%, and net income actually doubled, more than double, coming in at 117%. So on an annualized basis, of course, you're going to compare it to the four quarter the year before, it's definitely increase remarkably, right? Revenue and EPS has increased remarkably. But what we are trying to see here now is the change here, or rather the negative change uh, on a quarterly basis for revenue and EPS. Now, should this continue into the second quarter of this year, right? Once again, this is going to raise some concerns not only for Meta, but for the other Mag 7 companies as well. And of course, their overall impact is going to, or their overall decline in revenue and EPS is going to have a major impact on the S&P 500 and the Nasdaq 100 indices as well. And Tesla has been the sick company of the Mag 7, right? They've had pretty over the last three quarters. Over the last three quarters, they've missed revenue and EPS, and at the same time, you can see their profitability dropping as well, right? It happened here in the third quarter of 2023, and then it sort of stabilized, and then in the first quarter of 2024, we see EPS dropping once again. Revenue in the previous quarter came in at about 25.2 billion, dropped down to about 21.3 billion here. So this is almost a 20% drop in revenue, and EPS as well has dropped by close to 40 to 50% as well, right? Coming in at 71 cents per share in the previous quarter, now dropping quite sharply down to 45 cents per share, right? So Tesla, right, as I said, you can just tell by the market capitalization as well by looking at it, just 555 billion versus 3.2 trillion for Microsoft. You can really see that the share price has taken a hit. Now, some of this has been well documented over the past few quarters as well, right? They experience various challenges only in Q1 as well, right? Due to the Red Sea conflict and arson attack at the Gigafactory in Berlin, right? And there's also unscheduled downtime at their Cybertruck, not Cybertruck, at their other facilities as well. Global EV sales in general continue to be under pressure, right? As more companies look to prioritize hybrids over EVs, right? EV adoption has started to pull back, and the market looks to be favoring hybrids. Okay, one positive thing is they've also undertook a recent cost-cutting exercise as well to increase operational efficiency, but you can see that hasn't actually we've not seen any notable change to EPS as well, right? We would expect a much better EPS reading, right, if this cost-effective measures had been had a greater impact. Right, so generally you can see there's a lot of gray clouds for Tesla, right? It's not looking good at a global level when it comes to EV sales, and also when you see this shift in the consumer from going from full EVs to hybrids, right? Remember, Tesla does not make any hybrids; they're a full EV company, and it now seems like the consumer at a global level is starting to prefer hybrids rather than outright full EV models. All right, now before we dive into the charts on TradingView, let's take a quick look at the Nvidia stock split, right? So this stock split was announced at their earnings call on 22nd of May. So at that time, on that date, Nvidia was trading around $950, right? And it's also reached a new all-time high, and the stock split effectively took effect last night, right? Or rather yesterday on 10th of June as markets reopened on Monday. Now, this is the this is not the first time Nvidia has split a stock. The last time they had a stock split was in June 21 of 20, on June 21st, 2021, right? So that's when they I can't remember what was the split back then, but we can see that this is not the first time they've done it. And generally, before a stock split occurs, there's quite a huge, there can be a huge rise in the share price of that company, as well as many investors and traders are going to buy up the company before the stock split takes into effect. So it also could be a case of buying the rumor and buying the rumor and sell the news. So let's see how Nvidia is going to open up today as well. Right, there's just some information here on how your if you do own any shares in Nvidia, how it will be calculated and how the stock split will affect your holdings and the number of shares as well. All right, now we should dive into the charts on TradingView, and we'll start the analysis by looking at the index level, right? Remember, QQQ is the Invesco Triple Q Trust is the ETF that tracks the Nasdaq 100 index, and we know that the Mag 7 makes up a big chunk of this ETF as well, right? So if these companies, right, these Mag 7 companies are all rising strongly, they are definitely going to pull up the entire ETF, despite many other companies, despite maybe the other 90 companies in this index not doing well. Conversely, if the Mag 7 undergo a major correction, right, this is definitely going to pull down the entire index, even though you may have the other 90 companies doing pretty well, right, in terms of share price performance. So take note of that, because the Mag 7, whether we like it or not, has a huge impact not only on the Triple Q ETF, but also on the SPY ETF, which is the S&P 500, which is the ETF that tracks the S&P 500 index. So take note, they definitely have a huge impact on the direction of the respective indices as well. All right, so now I'm on the weekly time frame for the Triple Qs. Let's start the analysis here. So as we know quite clearly, it's all made new all-time highs, right? This is the current all-time high for the Triple Qs, which is at $465.74, right? The previous all-time high was set back in November of 2021, and we took almost 2 years, just a little bit over 2 years, to finally rebound, exit from the bear market, and breach the previous all-time high to make what was previously the all-time high at around $446, a pullback over a period of 3 to 4 weeks before finally rebounding strongly once again to make new all-time highs. Now, so okay, quite clearly the first resistance for the Triple Qs is over here at 465 0.74, which is the all-time high. I do see where I would identify the first major support would be at this pullback level here, which was where the previous all-time high was formed at around $446.58. Right, and the second support is going to be here, right? We see a nice overlap, a pretty decent overlap between the all-time high that was set in November of 2021, and we also see as prices pull back in April here, right? We saw it find support just above this level and reverse to bounce higher here. So this is a pretty decent overlap level as well, and we can use this level at 408.71 to identify it as our second support. Right, we can also run a Fibonacci retracement starting from here, this swing low in October of 2022 going up to the all-time high. We can see that the Triple Qs did find support at exactly the 23.6% Fibonacci retracement as well. So let's just keep 23.6. Right, now with the index trading at all-time highs, how are we going to identify the next major resistance level, right? Remember, we have nothing to work on, right? It is trading at all-time highs. There's no other significant swing high resistance or pullback resistance that we can identify and reference. So in a scenario like this is where Fibonacci tools come in handy, right? We can use a combination of several tools. We're going to use the extension first, right? So the extension levels are found by running a retracement. So this retracement will start from here, November 2021, going down to October 2022. The key extension levels lie at 127 and 161%. Now, we can see that the 137% has already been exceeded, right? This was, and take note, this was where the triple Qs actually ran into resistance back in March of this year, right? In mid-March, this is where the triple Qs ran into resistance at the 137% Fibonacci extension level here. Now we can see that the 161% Fibonacci extension level sits at around $500. So quite likely, this is where I think once again, this is where you could see the next major resistance come in as well. So that's where the second resistance has been identified. Right, now we can also use a Fibonacci projection, right? So Fibonacci projection involves 3 points, right? So we're going to start the first point from here, which is the bottom of uh, which is the bottom of the during the pandemic lockdowns in March of 2020. So point one starts from here, going up to the all-time high that was set in November, and finally coming down to 0.3 here, which is October, the bear market low of October 2022. Now, the key projection levels lie at 61.8%, 78.6%, and 100%. So you can see here, as markets were rebounding quite strongly, we can see that for a period of about 1.5 weeks, we did see the triple Q stall at around $408, which was not only the previous all-time high, but it was also a level that was identified by the 61.8% Fibonacci projection. In addition, this level here at around $446 is also a level that was identified previously. Remember, we had the extension level, and we also have the presence of a 78.6% Fibonacci projection level as well. So we have two different Fibonacci levels highlighting a major resistance zones, which is what we have at around $500, right? In this case here, we have two major Fibonacci levels. Basically, we have the 100% Fibonacci projection and the 161% Fibonacci extension, highlighting a major resistance here. So quite clearly, right, I'm pretty confident, right, should we see triple Qs break above its current all-time high, and if it should race towards $500 once again, this is where very likely it's going to stall should this ETF reach this price level here. So take note, this price level at around $490 to about $505 is definitely going to function as a strong potential, as definitely going to, or well, I wouldn't say definitely, but it's a very high probability that this region here is going to function as a strong barrier for should we see the triple Q continue to climb higher as well, right? So take note, at an index level, triple Qs where the current major resistance and support levels lie, and what can we expect as well, right? So should we see, we've also got FOMC coming up tomorrow, right? The Federal Reserve is going to drop its monetary policy statement, followed by Chairman Jerome Powell's press conference as well. Now that's important as well, because that's going to have an impact on the stock market as well, right? We've seen the recent inflation data, which was for the month of April, sort of moderate in the US, right? We saw US CPI moderate in the month of April, and we have CPI data coming out tomorrow as well, which will be for the month of May. Now, estimates for May point to another month of soft reading as well. So should we see that softer round of inflation data or CPI data tomorrow, then we are quite likely to see the Fed and especially Chairman Jerome Powell probably adopt a more neutral outlook with regards to monetary policy action. So if he does adopt a more neutral outlook, or perhaps even a slight dovish outlook with regards to future monetary policy action, we are likely to see the dollar and US government bond yields pull back, and it also is going to bring forward potential rate cuts as well, or rather it's going to increase the probability of a Fed rate cut in September. Right now, all of this, should it play out like that, all of this is quite likely to fuel US stock markets even more, and potentially we may see this first resistance being taken out by tomorrow as well, right? So take note of how the FOMC statement and press conference along with US CPI data tomorrow is going to have a major impact on the near-term direction of the US stock market, right? And for specifically for the triple Q ETF, take note that this is where we could see it potentially break above the current all-time high, the first resistance, should we see inflation continuing to moderate lower, and especially if Chairman Powell adopts a much more neutral or perhaps even a slight dovish outlook with regards to monetary policy action, right? Future monetary policy action. All right, and that's at the index level. Let's then start off with NVIDIA, right? Let's take a look at NVIDIA. Ooh, there's a big spike here. Okay, I'm not too sure why this is here. Let me see if this is being registered on other charts as well. Just let me take a quick look. This is quite interesting. I didn't notice that. Okay, when I look at it on uh, this website here, investing.com, when I look at the chart for NVIDIA, right, I don't really see that spike that was being recorded in uh, this chart on TradingView, or perhaps it's just the feed over here. This might be some anomaly. I'm not too sure, but generally when I look at it on the other charts, I don't think this spike should be uh, in place, right? Yeah, looks a bit odd here. Okay, nevertheless, okay, earnings for NVIDIA for the first quarter of 2024 were released on 22nd May, and the next earnings are up on 15 August 2024, so a couple of months away. So we can see that revenue forward guidance is good because revenue currently came in at 26 billion and is expected to grow by 2 billion or to 2.5 billion, going up to 28.4 billion. EPS is also looks to be increasing as well. EPS was reported at 61 cents per share, and now it looks like it's going to gain by about another 10 cents as well. So forward guidance for Nvidia has been great, or has been good rather, when you see upward revisions to EPS and revenue estimates. So that means forward guidance is good. And if we do see the results actually come in higher than these two metrics, that's quite likely going to potentially push the share price of Nvidia higher as well. All right, okay, let's start on a weekly basis here. Okay, hang on, let me just, right, okay. So this, just for now, sorry, apologies for this. I don't know why this feed is coming in as such, showing this high wick here, but this is definitely not being shown in other charts as well. Or maybe it's just something to do with TradingView. All right, now, this is the all-time high for Nvidia after the stock split. Remember, before the stock split, it was trading as high as about $1,100 per share. But remember, this is now taken into effect, the stock split which occurred yesterday. So the current all-time high for Nvidia is about $125.59. So quite clearly, that's the first resistance here. And previously, we can also see the share price making a nice swing high resistance here at about $94 per share at the end of March, pulling back over this 3 to 4 week period, finding support around $75 before finally rebounding to bounce higher. So this, what was previously a swing high resistance, could now potentially function as support. So where I see one of the major support levels for NVIDIA is at around $94 or $95 per share. Right. We can also use Fibonacci retracement. Here, we're going to start the retracement from here, this low on the 10th of October, going up to this high here on the 3rd of June. Right, let's pull up all the fibs. Right, you can see that the 23.6% Fibonacci retracement also aligns quite close to where the previous swing high occurred in mid-March. So that this is definitely a good level to identify as your first major support. And we'll highlight it as a zone as well. Second major support for NVIDIA would be at this pullback here that occurred on at the mid-April, right? We can see it hit a high of $97, almost $100, and then dropping down to about $75. So you can see during this period here in April, NVIDIA actually entered a bear market, right? Remember, this is incorporating for the stock split now. It went as high as almost $98 per share, and it dropped down as low as 75. So it was definitely a more than 20% drop. So it was a temporary bear market here for NVIDIA, but prices stabilized and staged a very strong rebound as well. Right, for Fibonacci, we just keep 23.6% over here. Right, now remember, $135 is the all-time high for NVIDIA. Now, how could we possibly identify the next major resistance? Once again, we're going to rely on Fibonacci extension tools and projection tools as well. Right, let's start the first extension from here. So to find extension levels, we run a retracement. That's going to start from here, 4th of March, down to 15th of April. I believe most of the extension levels should have been surpassed. Yep, you can see 137, 167 all being exceeded. So this extension levels are not valid any longer. So let's just get rid of it. Perhaps we may have a projection level that we can use. So let's start this projection from here. This low on the 10th of October, going up to 0.2 on the 4th of March, coming down to the third point on 15th of April. Here, we can see that the 61% Fibonacci projection level aligns quite close to where the all-time high has been set. So quite clearly, this is a major resistance area for NVIDIA here. And we can see the next resistance being identified by the 78.6% projection, and then the next one higher up at 100%. So definitely my second resistance level is going to be identified at around $143 for NVIDIA. And if, let's just say, if we do see this company or the share price of this company accelerate even further, right, climb even further, then the next major resistance for NVIDIA is likely to come in at around $160. But for now, the key resistance levels are currently at around $130 and about $145 for NVIDIA. In terms of support, maybe perhaps this gap here can be identified as a potential intermediate support level as well. $106 might be a potential intermediate support level for NVIDIA as well. Remember, NVIDIA is not invincible, right? Remember, in March, or rather in end of March till mid-April, we saw this company or the share price of this company enter a bear market before stabilizing around $75 before rebounding very strongly. So remember, just as strongly as NVIDIA rises, the pullbacks can be hard and strong as well, right? So look for ideal pullbacks such as this level here, like this, such as this situation here. And in this period, right, as price made this all-time high and started to pull back, we would have run a Fibonacci retracement from 10th of October going up to the 4th of March. If we look at all the fibs, we can see that the share price here really did find support at exactly the 23.6% Fibonacci retracement level here. Okay, there's nothing else to go on with, but there was no other major support level to identify, but the 23.6% Fibonacci retracement did help us identify a potential support area, and which is where exactly NVIDIA did find support, right? So similar to the current situation, maybe if we do see NVIDIA pull back over the next few weeks, and if this level at 106 does indeed hold, that may help us identify a potential better entry for NVIDIA, right? I generally don't like buying anything at the all-time highs, right? Even if I bought this here in the beginning of March at around $100 or $97 per share, right? You would have experienced a 20% share drop in share price, right? That's, no one wants to go through that. You buy at the all-time high, prices pull back by 15, 20, 30%, and then you actually have a much better opportunity here, especially when the price rebounds of significant technical levels such as the Fibonacci retracement, which is what we saw in mid-April, right? This really identified as pretty strong buying opportunity for NVIDIA here. So similarly, looking at how this share price is currently trading, or how this company is currently trading, I would say look for potential pullback. Maybe that's going to be highlighted between this zone here. Right, this is a pretty strong support zone. This gap area here between $105 and $112 is a pretty decent gap area here. So do watch out for that as well, right? So should we see NVIDIA pull back and consolidate around this level here, this may be the next potential entry to, or this may be a good potential buy entry for Nvidia, right? Remember, try not to buy anything at all-time highs. It generally doesn't work out that well. Look for strong pullbacks. Fundamentals for Nvidia still look to be strong. They still look to be rock solid. So any potential pullbacks may be identified as a potential entry to get in on the stock once again. All right. Okay. We'll cover Microsoft next, right? And just before I do that, I'm just going to launch a poll as well for those of you who are viewing this webinar on Zoom. I'm just going to launch a poll. If you can, I truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with the technical analysis on Microsoft, and we'll cover one more as well. We'll probably cover Microsoft and I guess Apple, yeah, right? And of course, should you have any other requests, right? If it's not Apple, do let me know and let me more than happy to go through that analysis with you. All right, just keep the poll running for another 10 seconds or so. All right, okay. Thank you everyone for the feedback. Truly appreciate it. All right, now let's start the analysis on Microsoft. So once again, I'm on a weekly time frame here. So we can see Microsoft has set an all-time high back in May, right? This was at about $433.60. So this is a major pullback resistance level here. So the first resistance for Microsoft is definitely at $430.82. Right. When I look at support, I see a nice pullback support level here that's been in place since 20th of February all the way till April. Although you see the bottom of this wicks dropping low here, uh, but generally you can see this level functioning as a pretty strong pullback support level at around $397. Right. We can also run a Fibonacci retracement, right, starting from this bear market low of October 2022, going up to the high of May, right? We don't see the 23, we don't have any other retracement levels that align with the first support. However, I do see a nice overlap at around $366. Once again, I don't see any of the Fibonacci retracement levels line up well with the first and second support, so that's fine, right? Generally, Fibonacci retracements do help us to identify significant support areas, but in this case, when it doesn't line up with very obvious overlap levels such as this one here at $366 and this pullback support level at $397, that's fine, right? Sometimes the Fibonacci retracements don't line up with the major support levels that are currently identified at $397 and $366. So that's fine. So we'll just get rid of this retracement because they are not useful in our analysis. Now, similarly, we see, oh, I also see a nice, I think it's a nice bullish channel here for Microsoft, right? Yes, it's been trading in a nice bullish channel since January 2023. We can see it's tested the bottom trend line of this bullish channel several times, right? On September of last year, October of last year, and of course, as recently as April this year as well. Now, we can see it's trading close to the all-time high. So now how might we identify the next resistance level? Well, that's simply going to be, once again, relying on Fibonacci extensions and Fibonacci projections. So let's start with the extensions first. Starting from this swing high on November of 2021 down to the swing low on October of 2022, we can see the 137% extension level has been exceeded. And right now we see this current resistance level being identified by the 161.8% extension level here. So we can see how extension levels really do help us identify the significant resistance areas, right? It's not a 100% certainty, but it's definitely a high probability that these extension levels, when applied correctly, do help us identify significant resistance areas here. right? So once again, as Microsoft was rising strongly here, right, breaking past this previous all-time high in November 2021, then breaking past this all-time high in July of 2023, as it was rising strongly, right, we would have used this extension level at 161% to identify a major resistance area. So by identifying major resistance areas, we also help identify high probability take profit levels as well, right? So we use resistance levels or zones to identify potential take profit levels for the long trade, and we use support levels to help us identify potential entries for the long trade as well. Now, okay, so we've already used 161%. How are we going to identify the next level? In this case, we're going to use the Fibonacci projection. So we're going to start from here, the pandemic low of March 2020, going up to the previous all-time high of November 21, and ending with the October low of 2022. Oh, right. Okay. So in this case, all the projection levels have been exceeded as well, okay, or except for the 100%. But you can see, right? Okay. So let's just get rid of 61 and 78.6. So in this case, we had two Fibonacci levels highlight a major resistance zone for Microsoft, which was at around $430, right? We had the 100% Fibonacci projection, as well as the 161% Fibonacci extension, highlighting a major resistance zone. Now, how can we identify the next one? Let's see, maybe there's another projection that we can try. I'm going to try this from here. First point, October 2022. Second point, July 2023. And third point at September 2023. So let's pull up all the fibs first. So we can see 61 has been exceeded, 78% here aligns pretty well with this other two retracement levels, and we can use the 100% over here to identify the second major resistance for Microsoft. Right, so second major resistance for Microsoft is going to come in at $463. So that means, should we see a potential bullish breakout for Microsoft occur over the next couple of weeks, right? If we do see a nice bullish breakout occur, then I would suggest to use this 100% Fibonacci projection to help us identify a suitable take profit position here. So anywhere between $450 and $460 would be a good level to identify, or a good zone to identify as a potential take profit zone for any bullish breakout that we may see. And also take note, if Microsoft does break out of this bullish channel here, then it's quite likely, we are going to, it is very likely we have seen this bullish uptrend come to a temporary end, and we may see it pull back even further. So take note, the combination of this bullish channel and this first support at $397 is going to help us identify whether this bullish trend is going to remain intact, or are we going to see some consolidation or perhaps even a sharp pullback in the share price of Microsoft. Right, so take note, this bullish channel is very critical for determining the bias for Microsoft, right? If any significant breakout below this bullish channel, and especially breaking through the first support, is going to have a very significant change in sentiment, as well as in the direction of this the share price of this company. Right. Okay, so we've got time for another one. So let's do Apple. Right, so similarly here, we can see Apple is running into resistance once again. This is like a multi-swing high resistance for Apple, the first of which took place on July 2023, second one on December 2023, and now perhaps potentially one this week as well. Right, so quite clearly, the first major resistance for Apple is at around $197. And of course, when I look at this swing low that took place here on October 2023 and April 2024, this is where I would identify the first major support for Apple at $165. Now we can also run a Fibonacci retracement. The all-time high for Apple is this level here at $199, which was set, or which was formed in December of 2023, right? About 6 months ago. right? And now we can also run a Fibonacci retracement. We can run a retracement from this swing low here that occurred on Jan 2023, going up to the all-time high. Right, let's pull up all the fibs and see what we get. Right, we can see that this first support, which is like a multi-swing low support at $165, also has the presence of a 50% Fibonacci retracement quite close to it. So we can use this retracement level in our analysis. And then we can also use the 61.8% retracement to help us identify the next major support level. So 50 and 61 are the retracement levels that we're going to use. And then we can see that there's a nice pullback level here that occurred as well on February of 2023. This is where the second support has been identified. It's more of a zone rather than an outright level, right? It's more of a zone rather than an outright level. Here we go, right? Now, of course, where's the next resistance level for Apple? Once again, we can use a Fibonacci. We can probably use an extension as well. So we're going to run this extension. I'll rather run the retracement from here, the all-time high on December 2023, going down to April's low, right? The key extension levels sit at 137, 161%. So that means the next resistance level, should we see Apple break above $200, would be at around $210, right? That's identified by the 137% Fibonacci extension level. Right. Similarly, should we see prices continue to push higher over the next couple of months, then the next resistance, major resistance, can be identified by the Fibonacci extension at 161%, and that's going to be at around $220. All right. Okay. Anything else? Right. Okay. Looking at uh, the earnings calendar, right? Okay, so we had Apple's release its earnings on 2nd of May, which this was for the first quarter of 2024. And when we look at the next earnings release date, that's going to be on July 20, on 24, so in about 5 weeks' time, we are seeing EPS dropping once again, right? EPS came in at about $1, came in at $1.53 in the current quarter or in the latest quarter. And now we are seeing EPS drop further once again by about 20 cents. Revenue came in at 90.7 billion in the latest earnings and is looking to drop once again, dropping by nearly 8% once more. So forward guidance for Apple is not looking good, right? Forward guidance is not good. If a company is forecasting lower revenue and lower EPS for the subsequent quarter, that means that's a negative outlook for earnings, and this could also have, it's a major fundamental impact on the share price of the company as well. So future outlook is not looking great at a fundamental level when you're looking at corporate earnings and revenue, and that could have a negative impact on the share price as well. But however, take note, this level here at $165 has functioned as a very strong multi-swing low support since October 2023. So if we do see another sharp pullback in Apple prices, and if it does consolidate and stabilize around $166, that may then be potentially another entry to go long on Apple again, right? Although once again they have revised their revenue and EPS metrics lower. If we do see a nice rebound in sales in the second quarter, right, we're going to see a pretty strong revenue and EPS surprise as well. Right now, that surprise could also then function as further bullish catalyst for Apple as well. But for now, right, you can see actually Apple has actually pretty much done nothing. Well, not nothing has been trading sideways since July 2023. So nearly a period of nearly a year, it's just been trading between $200 and $165. So if you can see, it's been uh, trading the range or has been trading sideways, and that helps us identify potential buying and selling opportunities as well, right? So right now there's probably a good selling opportunity to go short on Apple, right? And you can use the all-time high, place your stop loss a few percentage points just above the all-time high, and have a pretty decent short opportunity on Apple, and targeting probably around $180 as the first take profit level, right? I see a nice intermediate support level at around $190, right? So that's where your first take profit level for any short trade should be identified, followed by the next take profit level, which would be identified around the first support. And of course, your stop loss should be placed a few percentage points above the all-time high, which is at around, what is this, $200, right? So there's also a pretty decent short opportunity on Apple at hand. And should we see it pull back all the way down towards the first support here, we may have another opportunity to go long on Apple once again. All right. All right. That's all I have for today. Right. Thanks everyone for tuning in to today's session. Right. Do look out for all upcoming webinars by Vantage Markets. And I look forward to seeing all of you at the next webinar. All right. Thanks everyone. Take care. Have a great trading week. And I'll catch you all in the next session.